If you don't prepare for economic downturns at all times, you might end up losing everything in the event of a financial catastrophe. It happens often for people to lose their employment even though they seem stable at the time. They can lose their house to the bank and see their retirement funds cut in half. All these could have an adverse effect on your health over time and strain your relationships. When the economy has been doing well for a while, it is easy to forget about the bad times. But there is never a moment when the consequence of slowdown should be underestimated. Fortunately, a downturn in the economy may provide a huge opportunity for those who have strong financial stability. They may be able to amass great fortunes far beyond their wildest dreams thanks to this. You may make the most chances that come your way by knowing how to appropriately prepare for bad situations. Hello everyone, welcome to Finance Wisdom. In this video, we're going to talk about possible ways to make more money in 2022 during economic recession. If you are new to this channel, do like and subscribe to the channel. A prolonged, significant fall in the economic activity is referred to as a recession. This might be brought on by a number of things, such as inflation when prices increase and the currency weakens, deflation when prices decrease and the dollar buys more expensive goods due to financing issues. These problems often lead to more people losing their job, a drop in consumer confidence, foreclosures, and businesses that fail. Most of the time, the stock market crashes because investors lose faith, get scared, and pull their money out of the market. One habit that you must establish in order to improve your finances at any point in the economic cycle is to live below your means and spend less than you earn. You save for the future and pay off debt using the difference between your income and spending. Unfortunately, a lot of individuals find themselves stuck in a loop where the cost keeps rising proportionally to their income, barely making ends meet when they earn a raise. The purchase of a new automobile or a bigger house is made with that money right away. Their trip has already been paid for when their tax returns arrive into their account. When you hear the term live below your means, you may think of adjectives like dull or ordinary. But when you start doing this, your life will undergo so many good changes. Did you know that a billionaire typically has 7 sources of income? They do not rely on their job to provide a single salary that covers all their expenses, such as their mortgage, vehicle payment, or other monthly obligations. One source of income disappears. If your income is varied, you won't be as concerned. You'll still be able to pay your payments in the event of an emergency if you combine budgeting with income diversification. Having multiple streams of income will make more money in 2022. The potential for one revenue stream to become a major source of income is perhaps the biggest benefit of having many sources of consistent income. For instance, a person with 9-to-5 job starts detailing vehicles on weeknights and weekends. The auto detailing company takes off and there are lines of people waiting to hire the person. It ultimately results in a considerably larger hour wage than a 9-to-5 job. With an annual income that is twice or triple what they were earning at their primary employment, they are now able to leave their full-time position and concentrate on their detailing company. In certain circumstances, it makes more sense to pay off debt than in others. Simply said, it makes sense to make minimum payments on low-interest debt while paying off high-interest debt as rapidly as possible. Instead of spending every spare dollar you have, pay off your low-interest loans as soon as you can. Consider whether it would be better to invest extra money that could earn 10% return instead of paying out debt that is a 3% interest rate if it could be invested to earn more interest than you are paying. Mathematically speaking, this makes sense, but some individuals fail to realize that when you have little to no financial commitments, your monthly expenses will be very minimal. When compared to someone who is drowning in debt, consider how much lower your monthly expenses would be if you didn't have a mortgage, vehicle payment, school loan, or credit card balance. Not to mention you'll sleep easier at night. This puts you in a far better position in the case of a recession and the possible hazard connected with an economic hit. If you like this video, don't forget to like and subscribe to the channel. Stay tuned until the end of the video to know how to make more money in 2022. How many of your purchases have you come to regret? That brand new vehicle you purchased has several technical problems as damaged and is worth next to nothing. What about the timeshare you were sold while on a vacation or the lavish wedding you attended with 300 guests to wed your now ex-spouse or husband? Spending money on these pricey items is okay if they are significant to you and make you happy, but the issue arises when individuals routinely make large and minor purchases without batting an eye. Spending money on items you won't care about in a few days weeks or even months after buying them is certain to empty your bank account. Buying items that won't be useful to make more money in 2022 when you lose your job or your retirement funds lose half their value due to market crisis, you'll be left wondering where all your hard-earned money went because of these pointless, careless purchases. You'll also get more pleasure out of every dollar you spend if you don't spend it on something you'll quickly forget. This is especially true if you think twice before making a pricey purchase or carefully consider if you want to treat yourself. When the stock market falls or there is a recession, it may feel like the end of the world as you know it. Will the situation ever return to normal? It's important to remember that, according to Acorns, the typical recession lasts approximately a year and a half and happens every 4 years. The typical bear market, or when the stock falls at least 20%, lasts 9 to 10 months, happens every 3.5 years, and the average stock market decline during these times is approximately 35%. In other words, the stock market declines by 35% on average every 3.5 years, but it often recovers quickly. When your assets loses a significant portion of their value, it may be scary, particularly if you're growing older and restoring that money would appear to be out of the question. Your money is almost dissipating into thin air there. But these occurrences become far more bearable when you consider history and know what to anticipate. Markets are not always profitable. Keep that in mind. We'll advise you to build up your portfolio for such scenarios and steer clear of anything you wouldn't want to hold in the event that these setbacks should occur. Don't ever borrow more money than you feel comfortable having, and keep your leverage at a safe level at all times. When the economy had been strong for a while, buying stocks on margin looked like a good idea. But what would happen if things started to become worse? Do you still think it's a good idea, or are you using too much leverage? What about your home equity line, which lets you borrow against a significant portion of your property's worth but leaves you with little to no equity? Currently, you can easily afford the payment, but what if your income were to drop? Although borrowing money might be beneficial, you must be extremely cautious not to utilize it excessively. You can't keep from doing this by keeping in mind how the market operates. Warren Buffett once said, "Be greedy when others are scared, and be fearful when others are greedy." When these assets regain their all-time highs, those who are in a good position to purchase them at a bargain often reap great rewards. Buying the dip is acting to timing the market and adheres to the fundamental investing tenets of buying low and selling high. Buying stocks when you see a big decrease in price with the purpose of hanging on to them for a very long period is a straightforward technique. Even though properly timing the market may be quite difficult, a recession may provide a chance for people with excessive funds to invest, but only if you have sufficient money to risk by making investments. When the economy is booming and seems unstoppable, it is quite simple to forget precisely how things appeared during previous recessions, particularly for younger people who have little to no prior knowledge of them. Those difficult days are now in the past. A significant loss in the value of your portfolio, a disruption in your income, and even the opportunity to profit from exceptional market value can be avoided by keeping these scenarios in mind and being prepared for them at all times. This is comparable to someone who is unprepared and expects only a flawless economy with steady returns on their assets, and may lose their house, have significant difficulties with their family, among other negative consequences. We've reached the end of another video, and thank you for watching. I hope you have learned the possible way to make money in 2022. If you like this video, do give us a like and subscribe to the channel and comment down below. Thank you and goodbye!